It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, and 10 a.m. in San Francisco. It's 10:30 at night in Mumbai as you're watching this. Ladies and gentlemen, greetings. Good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young, the IPO-VID Livestream, Series 16, Episode 4. If you could do your 6 times table, that's Episode 94 starts here. So the Intercontinental Exchange, interesting reports. Of course, they're still endeavoring to close their deal to take over Black Knight, the mortgage loan people. Maybe that Black Knight is going to actually sell its internal mortgage loan origination technology business in order to get the deal across the line. That's going to be a dealings and a negotiation with the US FTC to come. Meanwhile, in Turkey, much sadder news. Obviously, we all know about the horrific earthquake that has blighted the southeastern corner of that great nation and indeed the northwestern corner of Syria in the course of the last week. Not unsurprisingly that impacted the parish of exchanges, the Turkish Stock Exchange, quite sensibly halting trading after what was initially a deep sell-off, but more importantly, awaiting better clarification of what's happening in a huge landmass area in the corner of Turkey. The truly grim reality of that earthquake aftermath being that, well, the enormous disaster is going to see a vast increase, tragically, in death toll, even from the numbers already published. We are with Turkey and we mourn the many people who have been lost in that tragic earthquake, and we look forward to seeing the Borsa Istanbul back and operational soon. Meanwhile, one organisation which is fully operational, albeit it pulled an offer this week, is TP ICAP. They've terminated a series of conversations where they were looking at selling their data unit, Parameta. That's despite a great deal of investor pressure to try and deliver some investor value. Interesting numbers, though, all the same. TP ICAP rumouring that the Parameta business could be worth 1.5 billion. Apparently, the deal has been pulled because the TP share price itself has recovered to a total market cap for the group of just under 1.4 billion pounds. Therefore, it would seem there's still a lot of value somewhere buried within TP ICAP, if only somebody can find it. Our guest today, ladies and gentlemen, is Professor Monica Singer. Our topic, straight to the blockchain. Professor Monica Singer is a chartered accountant in her native South Africa by training, who was the first CEO of South Africa's CSD, Strate Pty Limited, which she set up in 1998 and ran until she resigned in August 2017. The reason for her resignation? Well, what an interesting technological move that was, and we're looking forward to discussing that this evening. In October 2017, Monica was appointed as South Africa lead for ConsenSys, a leading blockchain company. Monica is an advisory board member to the Global Digital Asset and Cryptocurrency Association and holds a professorial post at the University of Johannesburg, specialising in blockchain for the accounting and auditing profession. Monica previously worked at the Johannesburg Stock Exchange and also the World Bank in Washington, D.C. Monica, greetings. Welcome to IPO-VID. Where in the world are you today?
In Cape Town, love South Africa.
What a beautiful place to be. I have to say there are few cities in the world that can be more delightful than Cape Town, with its many enchanting, the environs, the hills with the great wineries and all that incredible coastline all the way around it. So how long, if I may ask you, have you been living in Cape Town? And we seem to be having a slight problem there, ladies and gentlemen. Let me just tell you where we're at the moment. We have been having a somewhat challenging week of logistics for this show. At this moment, I'm actually in Miami, which was not where I was intending to be. And we're actually recording this show because, unfortunately, due to other logistics, I'm going to be on a plane tomorrow when you should be watching this live. So my apologies. This isn't a live show today. It's a nearly live. Here's Monica. She's back again. Monica, how long have you been living in Cape Town?
For 5 years. When I resigned from Strate, I joined ConsenSys, and ConsenSys is a company that works remotely. So even before COVID, we are in 42 countries and we are completely remote, even though ConsenSys is registered in the US.
Fantastic. 42 countries. That truly is distribution with a degree of gusto in every sense. But let's take the story back a bit. So how did you come to be, first of all, at the Johannesburg Stock Exchange?
Ooh, that's an incredible story. So what happened was that I worked for the World Bank. First of all, I'm a chartered accountant, and then my passion has always been to fight corruption in the world. So my first job after articles was to join the Institute of Chartered Accountants as the technical director. So my job was to set the audit and accounting standards for the profession. And after 8 years of being an expert of international accounting standards, the World Bank asked me to go and work for them. They wanted to analyze the accounts of the World Bank because they had to prepare financial statements in accordance with the FASB standards, which is the standards for the US, and then they had to prepare them in accordance with international standards. So I went to consult as to whether or not the accounts were in order. And after that project with the World Bank, I came back to South Africa, and I wasn't sure what I wanted to do. And I went to speak to people. And one of the people I went to speak to was the CEO of the Johannesburg Stock Exchange at that time. And he knew me from the Institute. And he said to me, "I've got the perfect job for you." And I said, "What's that?" He says, "I wanted to come and introduce the digital transformation of the South African financial markets, because we are about to introduce electronic trading, but we still have a massive antiquated system in the back office, which means that we still settle the transactions on the Johannesburg Stock Exchange with share certificates and checks. And that is a disaster, because it's making us, at that time, South Africa was categorized as the worst emerging market in terms of settlement and operational risk. Worse than Venezuela and Russia at that time. So because I'm very patriotic, because I emigrated from Uruguay to South Africa and I love South Africa, I thought, what an opportunity to make a difference to South Africa. So even though I have to tell you that it was a scary job, because I did not know much about stock exchanges. In my heart, I tend to be more a socialist than a capitalist. So at that time, I was not interested in the stock exchange. And I actually think that that's what was the success, because they always say that innovation is brought into an industry by someone that doesn't understand the industry. Why? Because I didn't understand the old methodology, and I wasn't married to this settlement with paper. 2 weeks after, it was T10 plus forever, and all the ways that the stock exchange had been operating for 100 years, then I wasn't married to that technology, which was non-existent. So when I went and took on the job, because I love research, my job was first to find out what is it that the rest of the world had done. And there were two key examples at that time, which I'm sure, Patrick, you will remember. One was what happened at the London Stock Exchange, and then how the London Stock Exchange tried to introduce electronic settlement and failed. And then the Bank of England took over the project, created a company called Crest, and that company had to then clean up the mess of what happened with the London Stock Exchange, and they introduced electronic settlement. So at that time, I've learned all the mistakes that the UK had done, and I thought, oh, wow, now I know how to do this, and I hope not to make the same mistakes. The other great example was the project in Australia called CHESS, which they're currently trying to replace, but at that time, 25 years ago, it was a fantastic, successful story. So I was able to learn from the best. And then I ended up in Switzerland, where the Swiss had invented a new technology by employing an Indian company to create this technology. And I negotiated with the Swiss to buy the technology for South Africa. And they sold the technology to South Africa. And that's how I was able to implement for South Africa one of the best technology solutions in the world, which still is in place. It made us, if you look back into the history of the World Economic Forum, every year they report on the rankings of the best stock markets in the world. It got to a stage that we were ranked amongst the top 3 stock exchanges in the world. after Singapore and Hong Kong, because we had the best risk management principles implemented in terms of our settlement. So we went from the absolute worst to the best in developed countries. And therefore, the solution was to implement the best technology. It wasn't easy, Patrick, because the market was horrified that I was going to change everything they've been doing for 100 years. And my attitude was, guys, listen, it's not working. And therefore, this is the way we're going to do it. So it took a lot of courage by the board of Strate, the company that I created that became the Central Securities Depository. The board had to fight a lot of pushback because especially the brokers didn't want to change. You know, brokers are not very good at innovation. But the stock exchange was very strong. The CEO, Russell Lapcha, the chairman, Bobby Johnson, they were very strong in making sure that change took place. And I was very lucky to work under them. And the rest is history, because we started with equities, then we took on bonds, and then we brought money market instruments. And today, Strate is a very successful company.
That's a fabulous resume of, my goodness, what was effectively a decade of incredible innovation. And as you say, I mean, quite amazing. When Russell Lubscher arrived as CEO of JSE, I think one of the things he doesn't get enough credit for was identifying exactly what the pain points were. And more importantly, having the guts to go out and manage to make that happen. And I mean, obviously, you were the person he pushed front and center to make Strate happen, which was, frankly, a dangerous job. I mean, quite an incredible thing to go from the papered transactional business, as you say, of T plus essentially forever, huge failure rate, all sorts of issues. I mean, how quaint to think of people paying with things by check in this day and age, apart from, I think, one or two countries. Well, I suppose the USA and Malta spring to mind. But it was an amazing, it must have been an amazing time, because you had a completely blank slate to come in and do something new.
Yeah, absolutely. It was amazing. But really, I have to give credit to the visionary, you know, and as you said, the leadership of Russell Lapcha and Bobby Johnson, because the market was not happy. And we had to convince so many people. And you have to understand that the legislation at that time was written, taking into account a paper share certificate. Now we were eliminating share certificates. We were going full on dematerialization. Very few countries, very few, went for complete dematerialization at that time. And the Swiss still had a vault. I said, there's no ways I'm going to keep a vault. I'm going to burn the share certificates. We're going to go directly into digital, complete digital. So imagine the old lady saying, oh no, I just want to hold on to my share certificate. I want to smell it, I want to touch it, and I want to put it under the mattress. I said, well, good luck to you. So there was a lot of infighting, even at governmental level, because we had to amend the legislation, the Corporations Act, the Tax Act, the Securities Act. All of the legislation had to be amended to now take into account this new way of doing business, real time, all digital. And it was very, very complicated. So it took many years. I would say that the first 10 years were very, very difficult, very stressful. But you know what? The rest is history. And today we really have a very good risk management basis, to the extent that when the financial crisis happened in 2008, we were hardly affected, because our risk management principles were so strong that we could manage the risk. The systemic risk that was coming in the market were completely managed. And we were one of the few stock exchanges in the world that did not close their shop during that week. I'm sure you remember that terrible week, 15th of September, 2008, when stock exchanges closed down because of the uncertainty, the volatility couldn't be managed. We didn't close. We carried on operating as if nothing happened. Why? Because we had excellent risk management principles. And that I'm very happy that when we did, whatever we did, we didn't compromise. We said, some brokers would ask me, why do you want to run before you can walk? So their idea of innovation was, let's do it slowly, let's innovate slowly. I didn't do that. I went cold turkey. We're going from paper, crazy, inefficient, to the best in the world. And we are going to suffer, but we're going to suffer one time. And then we're going to have the best in the world. And I think that was the best decision that we ever took.
I would have to agree with you. I mean, I think it's incredible the achievement that was made, particularly given the fact that, as you say, really South Africa was the worst in the world. And yet that was incredible because the history of the South African markets, and actually you look at some of those laws that you were reforming, some of them had 100-year or more bases. It wasn't like we were dealing with, say, Russia or the other markets that emerged during the 1990s, because they could go from communism to rewriting an entire capitalist framework and go forward. It's amazing to think you were effectively dealing with laws that were from the dating back to the Boer War or before in certain places, and actually, by the way, were a great canon of law, remain a great canon of law, but they simply didn't take account of what was coming up for the 21st century. It's interesting also, as you say, chess, the original chess implementation done really, really well in Australia. All of their electronification had gone so well, but now it's somewhat outdated. And it's also interesting, as you say, looking back on the complete and utter cluster mess that was the London Stock Exchange's early attempt. It must have left you, I would have thought, lying in bed at night worrying, because if the London Stock Exchange couldn't get things together, it does put the Johannesburg Stock Exchange and Strate in somewhat of an invidious position.
It was. And you know what I learned? One of the things I did learn at that time, because I spent a lot of time in London trying to learn. And the one thing I learned is that you do not allow the brokers to tell you what to do. Because I'm sure you remember, Patrick, what happened there, which was that one of the key problems was that they kept on changing the specs. It was like constantly they were adding, they were changing, which it's very similar to what's happening today with Australia and the replacement of the chess system. Everybody has a say. Everybody wants to modify this and that and the other. You want to compromise because you don't want to make the pain too hard. So that's why, if I tell you what's happening today in Australia, is that nobody wanted the blockchain, so they started compromising. They compromised so much that at the end of the day, the project failed. And that's exactly what happened in London. Until, remember Ian Saville in Bank of England, he came in and said, that's it, off with the heads of everybody. I don't have to bow to any broker because I'm an employee of the Bank of England. We're going to do this in the national interest, and we're going to do it fast, simple, not complicated specs, and it's going to be done. And then he surrounded himself by an amazing group of men and women that were very professional and very committed. And that's what I've learned from Ian. He says, Monica, say no, stick to your, to your little objectives, and don't compromise, and start small, get the big wins, and then as the big wins happen, the market will gain confidence. So it took many years because we went live. Imagine we went live with one company in June 1999. Remember, 1999 was pre Y2K. So everybody was panicking that in December, the computer was going to fail. So they only allowed me to have one company to move to this technology. And it took me months and months and months to get one company to agree to do this. And the first company that agreed to do this was Harmony Gold Mine. And you would say, but how come they agreed to move to Strate? I'll never forget, I don't know if you ever met Bernard Swanepoel, the CEO of Harmony at that time, an incredible mining magnate and incredible innovator in the mining industry. So Bernard said, Monica, of course you can use us. And I said, Bernard, why? Why are you saying yes? Everybody's saying no. He says, Monica, listen, the risk in the mining industry is so big. Why would I be scared of a little Strate? And that was it. That was it. He wasn't scared. We went live. It was a massive success. And then I just had to wait for a Y2K to pass. Yes. And then the next year, they allowed me to bring 12 companies. And only the following year, they allowed me to start bringing every single company. So we started in 1999. We only finished bringing the last company, Old Mutual and Sanlam, which are our biggest insurance companies, in the year 2002. 2002. So it took nearly 3 years for the market to get used to the idea of bringing, dematerializing the equities and transferring everything into Strate. Yeah.
And I mean, also the complexity of that being the fact that, I mean, you mentioned it earlier, the archetypal little old ladies who wanted to keep hold of their share certificates. But I mean, the Johannesburg Stock Exchange has well over a century of being a very active market for retail investors. And that obviously makes it more complex still, because I mean, a lot of our European colleagues, for example, who ended up going through the whole process of removing their paperwork, it was predominantly dealing with institutions, which makes things a lot more easy. But particularly on a landmass the size of South Africa, it's quite an achievement to try and get all those certificates in and then go electronic.
Yeah, but wait, let me tell you a story. The government heard a lot of little investors complaining. So when we went to Parliament to get the law approved for dematerialization, the government said no. It's not going to be the only way. In this country, we give free will. What does it mean, free will? The investors must have the right to choose. So the law did not say compulsory, it said optional. So the only thing we did was then we went and amended the rules of the JSE to say, if you're going to trade on the JSE, you have to dematerialize. If you don't want to trade, you can keep your shares certificate under the mattress. So we achieved 95% dematerialization in value, but only 80%. So 20% of investors held their share certificate. But you know what? It was a mistake. You know what actually happened? While we did the dematerialization, remember, we audited every share certificate to make sure there was no fraud, because at that time, there was a lot of fraud in the share certificate market. So we washed every single share certificate. Those investors that chose not to dematerialize, they never had their audit. So do you know what's happening? These investors started passing away, they died, and then now the beneficiaries found a share certificate under the mattress. And guess what? They come and bring it to Strate, and we say, we're not touching this. It hasn't been cleaned. They go to the transfer agents, and many of those companies have disappeared. Right. They were, they delisted, they merged. So nobody could actually trace that share certificate was an actual valid share certificate. And that investment got lost. And I said to them, sorry for you, because I warned you that our technology was going to give you the certainty of the provenance of these shares. And now, because of your stubbornness, this is the consequence. So, you know what? Karma is a bitch. I'm sorry.
Well, that's an interesting question, though. Yeah. So just, on the workings of Strate, and I don't want to get into an incredible nerd off here while we're talking straight to the blockchain with Professor Monica Singer, who's coming to us from Cape Town in South Africa. But I'm very curious, Monica, how did you actually affect... Did you use, for example, the UK uses lots of sort of nominee accounts and throws things together at the broker level and so on. How does Strate actually work in terms of the owners of the shares and how they're recognized?
Okay, so that was a massive fight. Now, a fight like you've never seen. I nearly got fired for that. Okay, many times. Okay, but that one I felt very strongly. I wanted name on register. What does it mean? I wanted the investor to be in the register in their own name in Strate, because Strate was independent from the brokers, from the custodian banks. So it was a way to protect the investor. And I also wanted full transparency. What did it mean? That if an investor wanted to know their holdings on a real time, that Strate could provide that information. The market fought tooth and nail and said, no, we will stick to nominee accounts. So yes, sadly, I lost that fight. And we had the same system as the Swiss, the same system as the UK. And we also I wanted personally to get rid of transfer agents. And we couldn't achieve that because between the nominees and between the fact that there was still 20% of the retail market in paper, the transfer agents were holding the register of the people holding paper. Remember, we only had the register of people that had dematerialized. So the register became fragmented. Fragmented because of dematerialized and non-dematerialized. Fragmented because you have nominee after nominee after nominee. And then when all the money laundering and all the FICA legislation came, FICA is the KYC legislation,
Yes.
slowly but surely the regulators started realizing that they made a mistake. Because if the name on register was at the CSD, it would be always easier to trace who was the beneficial owner. And therefore, they made a mistake because not only they allowed nominees, behind that nominee, let's say Standard Bank nominee, they held other nominees, and eventually there were court cases. I'm sure you will remember the very fascinating case of Clearstream, that
Yes.
they were fined because behind a nominee of a nominee was Iran dealing in, illicit transactions. So the regulators in Europe said to Clearstream, you've got a responsibility to know the source of income here. And Clearstream tried to argue, but how would I know when it's nominee behind nominee behind nominee? And then everybody started questioning, what is this nominee structure? And then, I don't know if you remember, that the new CSDs, China and India, that came much later than we did, they went directly into name on register. So the argument that the market used to use to say, no, there's not enough computing capacity to hold everybody in the same central register, it's a lie. Because when China came and created their CSD, they had, we had 2 million investors. China had what, 30, 40 million investors, and they could have name on register? So that argument was a lie. The truth to be told is that every single service provider, brokers, custodian banks, other financial advisors, they wanted to ring fence their own clients and that they control, to charge them to whatever. And therefore, they didn't want to lose control over the clients and let the CSD be the one that was providing services directly to the beneficial owners. And then when the whole crisis happened with Clearstream, we went and said, let's give the option to the investor. If an investor wants to have the name on register with the CSD in mind, let them do it. Because just remember, it's the same, the difference between central bank money and commercial bank money. Commercial bank, much riskier because the commercial banks fail. Central banks, they don't fail. Strate, the CSD, doesn't fail. We don't have liabilities. We're just a cash cow with zero liabilities, highly regulated. So if you have your name in the register of Strate, Strate can't fail. If your name is in the nominee of a commercial bank and the bank goes under, then you have to be part of the bankruptcy, that whole proceedings of finding out with a curator if you're truly the owner, and the delays, that account gets frozen, you're not allowed to trade. And we said, why? When you can have it with the CSD, and then you will never have your account frozen. But you know what? The truth be told is that the market is very conservative. In South Africa, they want someone to look after them more than the CSD because they felt that they had a relationship with the broker or the financial advisor or the custodian bank. So don't think that even though we allowed name on register in South Africa, don't think that we had a lot of people coming to the CSD. Mm-hmm.
Yes, it's fascinating. So many issues you raised there. We're here with Professor Monica Singer. She's in Cape Town in South Africa. I have to say, ideal that this show's going out on February the 14th, because it's great to see a woman with a passion for market structure and discussing the clarity with which you brought. And I think you're right. I mean, name on register is quite an incredible thing, because now, given all of the different constraints that have been put together for money laundering, KYC, and so on, it makes total sense. And you're right. I mean, the computing power is not an issue in any form of database technology, but the brokers and the powers that be have fought so hard for so many years. And as you say, to keep all of these different agents in the structure. The one I always look at is how terrible it is the way that crowdfunding has been allowed to evolve in Western European countries in particular in recent years. And we have all of these people who have effectively got a promissory note via a platform. Now, I don't mean any disrespect to those platforms, but effectively it's a promissory note. You don't own something which is in an end CSD or an end structure. My goodness, so many things to unpick. But so, Monica, you had this amazing decade where you quite literally fought tooth and nail to establish Strate. Strate was, if I may say so, I thought an incredible success straight out of the box. Admittedly, it took a little bit of time. Y2K, everybody was paranoid about that and so on. And therefore, when you rolled out after this sort of 3-year period, things really started to work very, very well. Yeah. What was the most exciting challenges you had then? Because obviously you stayed with Strate for, good grief, I mean, another decade and a half.
Yeah, good question. To tell you the truth, I was getting bored. Okay, so I'm being honest. So what happened was that it took 10 years. Okay, we broke even on 6 years after we started. We thought we would break even after 10. But we did financially very well. We became a true cash cow. It was an incredible company financially, very secure. So everything was going great. And then we introduced bonds, and then we introduced equities, and then we did many improvements in the regulatory environment because we were the regulators of the market. The Financial Services Board, the regulators outsourced to us the responsibility for regulation. So it was a very difficult job to be the regulator and to be the driver of the market because there were many situations that could have been a conflict of interest. So what I did is I built this incredible Chinese wall separating the regulatory team from myself so that I could never influence the regulatory environment, because a CEO with that wasn't very ethical could have had a lot of power to change around some of the decisions of the regulatory environment. But I built that very separate. So we built a lot of improvements. But you know what kept me going? It was the fact that I thought, okay, now that I've achieved this, let me go out there in the world. I can see that in Africa and in Latin America, they still know CSDs. So I thought, what if I now become very involved in the regional associations in the world, and I joined the World Federation of CSDs to educate other markets as to how we did this, so that they don't have to make the mistakes of other markets. And that's what I did. I became a member of the World Federation of CSDs. I was the vice president of the African Middle East Regional Association of CSDs. So I had to travel the world, which was beautiful, especially to go to the Middle East, to go to Africa, to all these beautiful countries. I love traveling. So, and the more exotic, the better. And what better than to have the opportunity to educate people in the Middle East and in Africa. And then, because I'm originally from Uruguay, I speak Spanish, I became very close to the CSDs in Latin America. So I also joined AXTA, which is the Association of CSDs in America. And I was able to be part of the executive and also contribute with knowledge and wisdom and help all my colleagues around the world. So really was the giving back. While the CSD was running, Strate was running, every day is the same, nothing changes. I then went and dedicated myself to be an educator.
So you dedicated yourself to being an educator, Monica, and then a new technology entered your life. Tell us a little bit about how you came across the blockchain, or the blockchain distributed itself to you and you got involved with it.
Okay, this is an incredible story, incredible. So what happened is that, remember I told you that I worked for the Institute of Chartered Accountants fighting corruption and fraud. In the profession, the chartered accountant profession, there's one big problem that we all face, even today. And I worked for the Institute when in 1980, I joined in 1988. Okay, so 1988, there's one concept that existed then, which is called the expectation gap. What does it mean? It's what the investors and the stakeholders expect an auditor to do and what an auditor can actually deliver. So the world thinks that the auditors are there to prevent fraud. Not really. So because I can give you a lecture on fraud, why the auditor cannot prevent fraud when there's lack of internal control. So I felt very disappointed that whatever I did at the Institute, I couldn't prevent corruption and fraud. Then I went to the World Bank and I saw a lot of corruption. And therefore I thought we fell again. Then I created Strate, and I felt that were a lot of things that couldn't be done. What was one of the things we couldn't do? The listed companies needed to know real time who was buying and selling the shares, because, as you know, in a takeover bid, you want to know who's the one that is like trying to do a predatory type of takeover. We couldn't give that information real time. Why? Because of the nominees. The investor would have loved to get a statement real time of the holdings across any provider of intermediary services. Impossible, because every intermediary have their own books and every intermediary keeps their own ledger, and you can never consolidate them. So there were many things we couldn't do. And then 2008 financial crisis. I'm now the CEO of Strate. Terrible. You don't understand the pain, the fear that this systemic risk that was affecting the European and American markets was going to touch Africa, South Africa. And luckily nothing happened, but it was huge fear. So now here we are in 2015. And I hear at a conference someone mentioning Bitcoin. And I'm a researcher. Immediately download the white paper. I read the white paper. What does the white paper say? The white paper, in plain, simple English, says, you, people in the world of financial markets, are confused. You're getting this completely wrong. You keep on relying on intermediaries. You keep on centralizing central securities depository, central banks. You keep on doing everything that relies on an auditor that comes a year later to audit the books. What if we decentralize? We give all the ledgers to everybody. Everybody can see the same ledger at the same time. We use the internet, but the internet of value, with certain controls that nobody can amend. It's an immutable ledger. Nobody can commit fraud. The audits are real time. The accounting is real time. And instead of having the concept in auditing, it's called the 4I principle. 4 eyes, meaning more than one person has to see the transaction to verify it. What if everybody involved in the transaction can see the transaction at the same time? Patrick, I started crying because never in my life, after being in markets for my whole life, would have dreamt that the way to deal with this was the opposite of everything we had done until that point in time. So I thought to myself, the world is going to change because this is the solution. This is the magic formula for the world to empower the individual, to empower the investor, to empower and to get rid of intermediaries, to take away massive costs, inefficiencies. The markets are settling T3. Only now we're moving to T1. So we couldn't even reduce the time between trading and settlement. And this technology said real time, we will tokenize the shares. We have the tokenized money, and real time without intermediaries, we will deal peer to peer. If that doesn't deserve the Nobel Prize for Finance and Economics, I don't know what deserves it, really. So imagine me having to now go back to work every day at Strate, knowing that the world is going to change. So I started educating my board to say, guys, the CSDs won't exist in the future. You don't need a CSD. Why would you need someone to do delivery versus payment when this is going to happen real time in the stock markets and in the Internet of Value? And then the board said, you are going crazy. We don't believe in what you say. And therefore, because I wanted to decentralize Strate, I knew how to do it. I said, we can future-proof our role in the markets, but we need to think completely different. And they didn't agree. So then I resigned. I said, that's it. I cannot sit in the Titanic rearranging the chairs. I'm leaving. This thing is going to sink. Can I tell you how I thought it was going to sink? I said, at that time, there were around 700 companies listed on the JSE. I said, I predict that the way Strate is going to lose their right to exist is not because of their own doing. It's because companies will stop listing. Why? Because they will find new ways to raise capital that is more efficient. And therefore, who's going to want to get stuck in the walled gardens of the stock exchange in Johannesburg using the rand currency, our regulatory environment that has gone totally overboard is hugely expensive. People will delist and look for other ways to raise capital. And today, do you know that there's hardly close to 310 companies listed on the JSE today? So, and these delistings are going to happen around the world because of exactly this. Once the tokenization starts coming mainstream, because regulatory ideals will be more clear, I believe that that's going to be the future. So I couldn't stay. And then I was so lucky that the one of the top human beings in the world on blockchain, Joseph Lubin, who created Ethereum with Vitalik Buterin, and he created ConsenSys. He created ConsenSys in 2015, and he heard that I was resigning, and I was one of the first CEOs of a traditional finance company to say, I'm out of here, I'm doing blockchain. Don't ask me at that time what blockchain I was going to do. I just wanted to leave. And then he approached me. He says, please come and work for me in Africa. You can live wherever you want. We work remotely. And I want you to now tell the world what you're learning and be an advocate and an educator, because I love educating. As you can see, my whole life was about research. And I want you to educate the world about the changes that are coming. And I joined him, and I've never been happier in my entire life because I work remotely in Cape Town, talking and educating about blockchain. So that's why I had to go.
Wow, that's quite a lot. Once again, to unpack, Monica, it's quite incredible. We're here discussing Straight to the Blockchain with Professor Monica Singer. She was the founding CEO of Strate, the CSD of South Africa, affiliated with the Johannesburg Stock Exchange Group. An incredible story. So with ConsenSys, tell us, what do you do? I mean, if I may be all King Charles in questioning you.
So the main thing I do is, as you can see, is advocacy, because what I can do is I can sit with baby boomers that are currently controlling the markets, and because I was a regulator and so forth, I can sit with them and educate them about the changes that are coming. So I was one of the first ones in 2018 to sit with central banks around the world and educate them that they should be researching central bank digital currencies, because I could see that new money was going to be created by private companies like Facebook, Libra at that time. And I said, Facebook, Libra is going to compete with the fiat currencies in the world. And unless you have a plan B, people will stop using your fiat currency. And you know the impact of central banks not having the right to have their own fiat currency. Imagine what happens to economic policy and financial decisions and interest rates and inflation. And therefore, I said, please start researching. But the only way that I could do that was by educating them. So I started creating material that explains blockchain in language that is not technical. It's more understandable from a business perspective. So that's what I've been doing for 5 years, sitting really with CEOs of companies, with central bankers, with regulators, educating, having brainstorming sessions, writing papers, articles. And now what I'm much more interested in is really the whole accounting and auditing, the effect that this technology is going to have on accounting and auditing standards, the changes to the profession. And that's how I became a professor of the University of Johannesburg, because I was able to teach the professors of accounting and auditing about the new digital economy and how this is going to change the educational system completely, and that was even before Chat GPT, much before artificial intelligence. Just blockchain as a technology where you have real-time audits, real-time accounting, that in itself changes the complete paradigm of auditors. And then the accounting standards that are very, very antiquated are not keeping up to date with the reality of what this technology is going to do. I'll give you an example. In America, the current accounting standard for cryptocurrencies is that you treat them as intangibles. Intangibles? You know what an intangible says, the accounting standard? It says, if you have an intangible, you can write off the value drop, but you're not allowed to raise the value above cost. Really? Imagine a Bitcoin in your balance sheet where the value fluctuates up and down. You can write it down, but not up. Is that fair representation of a cryptocurrency? It's absolute nonsense. So we know that what a cryptocurrency is, it's a financial instrument. Our law in South Africa has been amended to recognize cryptocurrencies as financial instruments. What does it mean? If you go to the accounting standard on financial instruments, you recognize them mark to market. You recognize the ups and the downs because that is the fair representation of the value of that asset. So we're still waiting for FASB to come in line. The FASB is the standard setting body in America to come in line, but I think they're now coming more and more to the conclusion that they need to amend the accounting standards. So I have spent quite a lot of time with the International Federation of Accountants, teaching them about cryptocurrencies so that they can be also on board. And whatever I can do, I'm currently working with the Enterprise Ethereum Alliance. We're writing a paper on the risk on decentralized finance. And I haven't even mentioned decentralized finance, that's going to completely change the world. I want your listeners to look at Uniswap. Uniswap is an automated market maker in the decentralized finance world where anybody can trade anything real time. And it's making more volumes than the combined volumes of all the stock exchanges in the world. So you have to see where the world is moving, and it's moving to Web 3.0, decentralized finance, using cryptocurrency type technology. It could be stable coins. It could be, we're even talking about tokenizing deposits. It could be central bank digital currencies, and it could be cryptocurrencies. So new forms of money are being created to cope with this new world of the Internet of Value where anything is going to be traded.
Gosh, well, that's a very interesting manifesto for decentralization. I hear you on the auditing thing. I mean, I discussed that actually in Victory or Death, my most recent book, and I'm not an esteemed auditing professional such as yourself, Monica, but I think there's, so obviously a case that the ability to have the real-time audit function completely revolutionizes things in a way that we haven't seen since 500 years ago when people were sitting on benches and they used those to become a bank and start the one side and the other of a balance sheet itself. But I'm interested in the decentralized finance thing because actually I'm just thinking back to just last week, we had the Streetwise professor, Craig Perron, and his argument was that he just doesn't see the ability of decentralized finance to truly thread itself through the hurdle of the legal system. I mean, essentially, we've had umpteen thousand years of laws where they like things to be in some way centralized. And I'm just curious, how do you think decentralized finance manages to get away from that ethos of there has to be somebody who signs on the bottom line, such as the CEO of Strate or the head of risk at Strate or whatever?
Well, it's a great conversation because the whole debate of governance of a DeFi protocol is still evolving. And I don't know if you heard about the DAOs, decentralized autonomous organizations. They are not even a legal entity, they just form a group of people that come together and they come and they contribute. And by contributing, they get tokens, which is like shares, and it's open. You don't have a boss. You work when you want to. You get paid when you contribute. This new freedom of the decentralized world is coming, and the same way that when I took over from the traditional stock market with paper, and the legislation was you needed a share certificate to buy a stamp, to lick the stamp and put it on the share certificate in order for the taxes to be collected. Remember, stamp duty. Stamp duty was a stamp that you put on the share certificate. That's how the taxman collected the stamp duty. We had to amend all that. So whoever is saying, oh my gosh, I can't believe they said that the legislation does not cope, with decentralization. Well, that's what I'm saying. The baby boomers must move on. And we must now work with a younger generation that for them is going to be the norm. They're going to not question, I need that CEO to be held accountable. What if the accountability goes to the collective? What if there are other controls like the decentralized finance blockchain, immutable, transparent, that gives you the complete audit trail of everything that's happening real time, and you don't need even an auditor to come and check the books if you don't want to. What if we change that paradigm? At the moment, we still have command and control, the hierarchy, the board of directors, So it's going to take time because it's a massive change in paradigm. And, this is what I call the slowly, and then suddenly someone realizes this is a much better technology, and we should now amend the law to keep up with the technology advancements that we have seen in the world.
Yeah, I think that's a really interesting point, because actually that's exactly what we have seen is some of this growing pain, because recently, rightly or wrongly, we've seen the SEC moving against some of the DAOs and saying, okay, you want to be collectively making the decisions, but then you're collectively responsible. And actually the initial reaction has been everybody's gone, well, I don't want to be responsible. Well, the truth is someone has to be responsible, and whether that's centralized or decentralized. And I agree with you, it's a huge work in progress, and it's probably something that we can come back and review how things have been going fast and slow in a year's time and see where we've got to. But I mean, I'm conscious of the amount of time we have today, because this discussion could carry on forever, all the way to next St. Valentine's Day, I think, without any difficulty whatsoever, Monica. It's been a joy having you on this show discussing the whole issue of moving from Strate to the blockchain and the revolutions all the way therein. But let me ask you a question. Obviously, way back when in 1998, I wrote a book called Capital Market Revolution, and actually it talked about digital money. It talked about the probity of trying to go for real-time settlement, which everybody laughed at the time, and lots of other things besides. Where do you think, Professor Monica Singer, the capital market revolution goes next?
As you can see, I'm a believer. I truly believe in a decentralized world, decentralized finance. The DAOs are going to find a way. And just also remember, this technology brings incredible power, and with power comes responsibility. So only those that are going to be able to cope with this responsibility would be part of this. So not everybody is a libertarian at heart like I am, that I love to be in control of my own destiny. A lot of people are going to outsource this to others. But I don't know if you know that we have a technology called MetaMask for institutions that allows the institutions to provide services to the man in the street. If the man in the street doesn't want to deal with decentralized finance, they go to an intermediary. They've got the same technology that you could get if you were doing it yourself. And therefore, if you don't want to do it on your own, you can outsource it to an intermediary. So intermediaries will carry on operating, but they will operate at a higher level of assurance. What do I mean? The intermediaries today, as I explained to you, when you have shares in the stock market, that your name on register is not there, and therefore your records are held under the control of that intermediary. That intermediary goes under, the shares could disappear. With this technology, what we're saying, you're not giving your keys. They can operate on your behalf, but you will carry on having control over your keys outside of the hot wallet. You put it in a cold wallet under your control, or these institutions are offering these custodial services with many controls. So we are becoming more and more sophisticated to find a way to prevent fraud and to increase the level of assurance that we can give the market that this technology will protect them and give them the self-sovereign power to become financially independent and less cost, faster, in an internet of value. Remember, this is the internet. There are no barriers, there are no borders. There is not the Johannesburg Stock Exchange, the Egyptian Stock Exchange, or the US Stock Exchange. This is going to be the Uniswap exchange, which is completely based in the internet. It has no borders, it has no geographical area. It will have to abide by international principles. So hopefully, like the Bank of International Settlements or even the Financial Stability Board will carry on developing rules that take into account the international nature of this technology, even the DAO technology, set up for legal entities. But the law will have to then accommodate this new reality of a world without borders using the Internet of Value.
The world must change in this exciting new, much, much less focused on being bordered world, a borderless world with decentralized finance as a driving force for what could be a new prosperity. From Professor Monica Singer, whose lifelong goal has always been to try and make sure that there's a world with much, much less corruption, if not entirely bereft of corruption, understanding the opportunity for real-time audit, the opportunity for essentially real-time settlement. That's been a journey that's taken you, Monica, all the way from the World Bank through the Johannesburg Stock Exchange, building Strate, the CSD of South Africa, which was in its own way a world first and certainly a state-of-the-art landmark project that was built in the south of the African continent and took South Africa from being the world's worst behind, as you say, Venezuela and North Korea. That's a pretty dubious pairing to be behind, all the way into the top leading group at the head of the peloton of the world's settled markets. Now, ConsenSys, a fascinating opportunity to go straight to the blockchain. Ladies and gentlemen, our guest today has been Professor Monica Singer, an absolutely sensational show. Next week, we're going to be diving into, well, rare earths and much more besides in the world of commodities with the fabulously irrepressible journalist, expert in markets and economics, Tim Worstel. I'm really looking forward to that show, which will be live next week. Thank you very, very much for joining us today. Sorry we couldn't run this live, but we had a few logistical issues entirely at my end. Thank you to Monica Singer for being so flexible in terms of recording this show. This has certainly been a Valentine's Day message with passion from the distributed ledger, with love to the world out there, borderless as it may be. Thank you very much to the production team today, to Beata, to Rochelle, to Fernando, to Marianne and Janella. It has been an epic IPO-VID number 94. My name is Patrick L. Young. I wish you a great week in life, blockchain.